compounding is like a magical money growth spell. It is investing your hard-earned cash in specific investment assets that generate returns for you. But instead of cashing out those returns, you reinvest them right back into the same asset. It's like having a loyal army of money-making minions, working 24/7 to expand your wealth without you lifting a finger. You don't need to be a financial guru to set this in motion. With a solid understanding of your chosen assets and a well-thought-out strategy, you can put compounding to work for you, just like the wealthiest folks out there. Also, compounding is not a get-rich-quick scheme. It requires patience, discipline, and a long-term mindset. If you want to know how compounding works, I have made a video on what compounding is and how it works to multiply your earnings. The video will enlighten you on how this magical tool works. If you would wish to watch it after this video, do click the link in the description box below. Before we begin, something to note is that every single calculation of compounding you are going to see has been done on available free compounding interest online calculators. I use the investor.gov or the calculatorsite.com, which are free to use. This means the calculation results of the final output obtained from both sites may slightly differ. Now, let's get right into it. First up, let's talk about equity in the media. The media business is an ever-evolving industry that encompasses various forms of content creation, distribution, and consumption. Traditionally dominated by television, radio, and print media, the landscape has experienced a dramatic shift with the advanced internet development and social media platforms. This digital revolution has democratized content creation, enabling individuals and businesses to reach global audiences like never before. Social media has emerged as a dominant force in the media industry. With platforms like YouTube, Facebook, Instagram, TikTok, and Twitter, content creators can build massive followings, monetize their content, and establish lucrative businesses. YouTube, in particular, has become a breeding ground for creators, offering a partner program that allows users to earn revenue from advertisements and subscriptions. For investors, YouTube's immense popularity and revenue potential make it an attractive equity investment opportunity. The platform's parent company, Alphabet Incorporated, formerly known as Google, owns YouTube, and it is a vital revenue source for the tech giant. As YouTube continues to grow, investors can benefit from Alphabet's overall performance, making it an indirect yet powerful way to invest in the media business. YouTube has revolutionized the way we consume media, and they offer incredible opportunities for investors. By investing in media companies or becoming a content creator yourself, you can tap into a rapidly growing industry and benefit from the compounding returns that equity provides. Take, for instance, successful YouTubers who monetize their channels through ads, sponsorships, and merchandise sales. With dedication and strategic planning, it's possible to generate significant income from a relatively small initial investment, like earning $1,000 per month from your channel, depending on the niche one you are in, and investing that amount at a 10% annual return on better equipment or editing software. In just 5 years, your initial $1,000 investment could grow to over $80,000. This is because your videos will continuously earn you regular monthly passive income and continuously multiply and double the money you initially invest. Also, investing in established media companies can be a lucrative opportunity. As traditional media shifts to digital platforms, companies with a strong online presence are well positioned for growth. For example, investing $10,000 in a media company that provides streaming services. If the company's stock appreciates at a rate of 15% annually over a decade, your initial investment could potentially grow to a staggering $40,455.58. That's the power of compounding returns. 2. Software as a Service, SaaS. In today's interconnected world, the SaaS industry has become the backbone of modern business operations. If you're unfamiliar, SaaS is a booming industry where software applications are delivered over the internet. These companies provide cloud-based software solutions, enabling businesses to streamline their processes, enhance productivity, and reduce costs. They offer software solutions that are hosted on the cloud and delivered to customers as a service. This means businesses no longer have to invest in expensive infrastructure or worry about software maintenance. The exciting part is, once you build and launch a successful SaaS product, the compounding effect kicks in and can make your bank account sing. When looking to invest in SaaS stocks, investors should consider factors such as revenue growth, customer retention, market share, and the competitive landscape. Analyzing financial metrics, understanding the company's target market, and assessing its long-term viability are essential steps in identifying promising SaaS investments. With careful research and a well-balanced portfolio, investors can capitalize on the growth of the SaaS industry. This is a business that will be around for a long time because when it comes to SaaS, recurring revenue is the name of the game. Instead of relying on one-time sales, SaaS companies generate a steady stream of income through subscription-based pricing. Let's crunch some numbers. Consider a SaaS company with a monthly subscription fee of $100 with 10,000 active users. That means the company earns $1 million in annual recurring revenue. Now, imagine the potential growth when you expand your user base to 100,000, 500,000, or even 1 million subscribers. With effective marketing, product development, and customer retention strategies, you can achieve remarkable growth rates, which in turn increase your company's valuation and attract investors seeking equity stakes. Think about companies like Salesforce and Adobe. These industry giants have thrived by providing essential software services to businesses around the world. Whether it's customer relationship management, CRM, or creative design tools, SaaS companies are constantly evolving to meet the ever-changing needs of their customers. 3. Farmlands. This is the hidden gem of investing. While the world becomes increasingly digitized, one industry that remains steadfast is agriculture. Agriculture is the backbone of civilization as it plays a vital role in global food production and supply, and investing in farmlands has proven to be a reliable investment strategy throughout history. Investing in farmlands allows one to gain exposure to this essential sector while potentially benefiting from capital appreciation and recurring income from crops. The global population is growing, and so is the demand for food. By investing in this lucrative sector, enables you to tap into a business that caters to a fundamental human need, generates consistent cash flow, and potentially benefits from appreciation in land value over time. Farmland investments offer several advantages, such as a hedge against inflation, relatively low correlation with traditional financial markets, and potential tax benefits. Additionally, farmlands have inherent value as an infinite resource, making them an attractive long-term investment option. They provide a tangible asset that is less affected by market volatility compared to stocks or cryptocurrencies. They also can generate income through leasing or farming activities. With advancements in agricultural technology, farmers can achieve higher crop yields, leading to increased profitability. For instance, you invest $50,000 in a parcel of farmland that yields an annual return of 6%. Over time, your investment could grow substantially. In 20 years, your initial investment could potentially multiply to over $160,356.77. Agricultural investments can offer both capital appreciation and income generation, making them an appealing asset class for those seeking long-term wealth accumulation. By diversifying your portfolio across different regions and crop types, you can mitigate risk and optimize your returns. 4. E-commerce and digital products. In the digital age we live in, this industry has been a game changer, and it's only getting bigger and better with each passing day. E-commerce and digital products have revolutionized the business landscape, creating opportunities for entrepreneurs to generate substantial wealth. With minimal capital investment, you can build an online empire and tap into a global customer base. E-commerce has disrupted traditional brick-and-mortar retail by providing a global platform for businesses to reach customers. With a relatively low barrier to entry, you can start your own e-commerce store literally anywhere and offer your products and service worldwide. It offers incredible scalability, meaning as your business grows, you can easily expand your product offerings and optimize your processes to handle higher demand. Plus, you can automate many aspects of your operations, freeing up your time to focus on strategic growth and customer service. Why limit yourself to physical products when digital products offer unlimited scalability? Digital products such as ebooks, online courses, and software offer a unique opportunity to create passive income streams. Once you create a digital product, it can be sold repeatedly without incurring additional production costs. With minimal production costs and no shipping hassles, your profit margins can soar sky high. Let's say you are earning $5,000 a month from your e-commerce store selling ebooks and Canva digital downloadable templates. Assuming you reinvest 50% of your profits into marketing, improving the quality of the digital products, inventory expansion, and automation tools. Within 5 years, you could be earning $20,000 per month or more, depending on the amount of profit you earn each month. By compounding your profits, you create a snowball effect that accelerates your wealth accumulation. With the rise of social media and influencer marketing, building a brand and engaging with your target audience has never been easier. Leverage the power of digital marketing to create a loyal customer base and watch your revenue grow. 5. Franchise. Are you dreaming of running a successful business without starting from scratch? Franchising might be the perfect fit for you. By investing in a proven business model, you can leverage an established brand, systems, and support to fast-track your journey to financial success. When you invest in a franchise, you're buying into a tried-and-tested business model with a strong track record. This significantly reduces the risks associated with starting a new business from scratch. Investing in a well-known franchise allows you to tap into the reputation and customer loyalty associated with the brand. As the franchise grows, so does your investment. By reinvesting your profits into opening new locations, you benefit from economies of scale, increased brand recognition, and higher revenue potential. Once you have successfully established your first franchise location, you can leverage the compounding effect by opening multiple units. Owning multiple franchises generates passive income through a management team while you focus on expanding your portfolio. The beauty of franchising lies in its versatility. With a range of industries and niches to choose from, you can diversify your investment portfolio. By investing $500,000 across 5 different franchises, each generating an average annual profit of $100,000, you've built a solid foundation for long-term wealth creation. Plus, the potential for scalability and additional revenue streams through multiple locations is an added bonus. This diversification strategy acts as a safeguard against market fluctuations. Another reason why franchises are a win-win is the ongoing support and training provided by the franchisor. They have a vested interest in your success, so they offer guidance on everything from marketing strategies to day-to-day operations. As a franchisee, you benefit from their collective knowledge and experience. Additionally, the economies of scale work in your favor. Franchisors often negotiate bulk deals with suppliers, which means you get access to high-quality products at a lower cost. This boosts your profit margins and keeps your bottom line healthy. 6. Real estate investments. This sector has stood the test of time, and for good reason. It's a tangible asset that provides both shelter and potential for appreciation. It has long been considered a reliable and profitable investment asset class. Real estate, in its various forms, offers multiple avenues for generating income. From residential properties to commercial ventures and even real estate investment trusts, REITs, there's a niche to suit every investor's appetite. One of the fundamental reasons behind the resilience of this business is that people will always need a place to live and work. As populations grow, the demand for housing in commercial spaces remains constant, and with limited land supply, property values tend to appreciate over time. Investing in real estate is a classic wealth-building strategy that exemplifies the power of compounding. By purchasing properties with the intent of generating rental income or capital appreciation, you can benefit from the compounding effects of rental cash flow, property appreciation, and leverage. Moreover, real estate has proven to be an effective hedge against inflation. As prices rise, so do rental rates and property values, allowing investors to preserve their purchasing power and potentially grow their wealth even in challenging economic times. Let's assume you start with a single rental property worth $200,000 with a conservative annual appreciation rate of 5% in the real estate market. The property's value would increase to $210,000 in the first year, adding $10,000 to your net worth. If the rental income generates $2,000 per month, it will result in $24,000 in annual rental income. With proper management and reinvestment of profits, you could use the rental income and accumulated equity to purchase another property within 2 to 3 years. By repeating this process over a decade, owning 10 properties worth an average of $250,000 each, your real estate portfolio could be valued at around $2.5 million. The rental income from these properties could reach an impressive $240,000 annually. These combined benefits create a robust investment model that continues to attract both seasoned investors and newcomers to the market. 7. Stocks and index funds. If you want to harness the power of compounding to make your money work for you, investing in stocks is a great way to start. You've probably heard the buzz surrounding them, and for good reason. When you buy stocks, you become a shareholder, which means you have a stake in the company's success. If the company grows and prospers, your stock value can skyrocket. It's important to note that investing in stocks requires careful research and analysis. You want to select companies that have a strong track record, solid financials, and a promising future. Look for companies with a competitive edge in their industry and a proven ability to adapt to market changes. If you invest $10,000 in a tech giant like Apple Incorporated in Apple stocks in 2022 with an average annual return of 10%, at the end of the first year, you'd have $11,000. But here's where it gets interesting. In the second year, that 10% return isn't based on your initial investment of $10,000, but on the new total of $11,000. So, you'd earn $1,100 in the second year, bringing your total to $12,100. But hold on, since stocks can be volatile and risky, then index funds investment would be a better starting point. For those who prefer a more diversified approach, index funds are an excellent choice. Index funds pool together a wide range of stocks to replicate the performance of a specific market index, such as the S&P 500. The beauty of index funds lies in their simplicity and reliability, as they're a hands-off approach to investing and perfect for those who want to set it and forget it. By investing in a broad-based index fund, you're essentially investing in the entire stock market. So, even if some individual stocks within the fund perform poorly, others will compensate and keep your returns on track. Plus, they often come with low fees compared to actively managed funds, meaning more money stays in your pocket. 8. Online education and e-learning. In a world where so much is changing quickly, traditional education is no longer the only path to acquiring knowledge and gaining valuable skills. The internet has opened up a vast array of educational opportunities that can empower you to learn and earn simultaneously. Online education offers flexibility, convenience, and accessibility like never before. You can choose from a wide range of courses, programs, and degrees offered by reputable institutions and industry experts. Whether you're interested in learning coding, digital marketing, graphic design, or even business management, the options are virtually limitless. E-learning platforms have revolutionized the way we acquire knowledge. Platforms like Skillshare, Udemy, Coursera, and LinkedIn Learning provide a treasure trove of courses taught by industry professionals, allowing you to learn at your own pace and on your own schedule. Whether you're a student, a working professional, or an aspiring entrepreneur, e-learning platforms offer something for everyone. Acquiring new skills and knowledge can significantly enhance your earning potential. By investing in your education, you're essentially investing in yourself. The skills you acquire can have a compounding effect on your earning potential, opening up even more opportunities in the future. The key to the success of this investment lies in its scalability and global reach. Unlike traditional educational institutions limited by geographical boundaries, online education transcends borders and connects minds worldwide. This opens up a vast market of eager learners hungry for knowledge and personal growth. As a business, online education is not only lucrative but also incredibly rewarding. You're not just selling a product, you're empowering people to transform their lives. The demand for continuous learning is perpetual, making it a business that never goes out of style. And there you have it. By harnessing the power of time and growth, you can watch your money work tirelessly for you, turning small contributions into substantial riches over the years. So, don't wait another minute. Take action now, and let compounding do the heavy lifting for you. The key is to start early, stay disciplined, and let time work its wonders. So, whether you're just starting out or already on your investment journey, keep learning, keep investing, and keep building your wealth. Don't forget to hit that like button and subscribe to our channel for more valuable insights and tips on how to maximize your wealth.